Hello everyone. Today we're going to talk about the main indicators coming out this week, which are the U.S. non-farm payrolls, the Global Purchasing Managers Indices, or PMIs, and the European and Eurozone Consumer Price Indices, CPIs. This is Marshall Gittler, Editor of Investment Research here at FXPRIMUS, bringing you my Week in Focus. But first, I want to focus on the new year, and I want to wish you all a Happy New Year. I hope this will be a fruitful year for you and one filled with successful trading. Well, the holidays are over now, pretty much, and it's back to work for many of us. This week we have the December Purchasing Managers Indices and the big indicator of the month, the U.S. non-farm payrolls, NFP, and all the employment data that goes with it. And at the end of the week, we even start to hear from central bankers again. Two of the regional Fed presidents speak on Friday. This week's NFP figure is likely to confirm the market's assumption that the Fed will hike rates further this year. Fed Chair Yellen said last August that NFP increases of 180,000 a month were unsustainable. But so far, there's no sign of any slowdown. The forecast rise of 175,000 would be about the same as November's 178,000 and in line with the 6-month moving average. That should confirm expectations of rate hikes and thereby support the dollar. Wednesday's release of the minutes from the December FOMC meeting should also be positive for the dollar. The decision to hike rates was unanimous, which suggests that there could be some fairly strong arguments in favor. That may remind people that the median FOMC member now sees 3 hikes this year, which is another reason to buy dollars. The PMIs may well bring a boost to the dollar as well. Most are on the right-hand side of the graph that you can see. This shows expansion, and a good number on the upper right-hand quadrant, showing an accelerating expansion. With its higher interest rates and booming stock market, the dollar is now an asset currency and so benefits from a risk-on atmosphere. The pace of expansion of the global economy was at about a 1-year high in October and November, underpinned by firmer growth of new orders and faster job creation. Even just continuing at that pace would be encouraging. Yet, the U.S. ISM Manufacturing Index is expected to rise further. Now, the British PMIs, the UK PMIs, manufacturing, services, and construction, are expected to show a slight deceleration, but from a relatively robust rate. It remains to be seen, though, whether that's enough to stop the recent decline in sterling. For the euro, attention will center on Tuesday's German CPI figure, followed by Wednesday's EU-wide CPI. Inflation is expected to rise sharply because of an increase in retail energy prices during the month. That could give the euro a boost. This is Marshall Gittler, Editor of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.